All right, so thank you so much for 100K subscribers, and to thank you guys, I am releasing my 100K special video. So this is the special video. In this video, I'm going to teach you the best power of 3 trading strategy. Now, there are different ways to approach power of 3, right? But this one is literally the best. If you don't trust me, just back test, forward test first, and then leave your feedback or leave your comment below. If it doesn't work for you, just comment down below, but I'm 100% sure it's going to work for you. All right. So if you are a new viewer and you don't trust me, right? Just a little bit of story about myself. I am a 6-figure funded trader managing 4 prop firm accounts at the moment, and I have helped hundreds of my students get funded and get their first payout. So rest assured, you are learning from someone who knows shit about trading, all right? Who actually knows how to trade. So what is the strategy, right? So basically what you have to do is before 8 p.m. So I'm not talking about 8 a.m. or I'm not talking about 9:30 a.m. I'm not talking about 2 a.m., right? I'm specifically talking about 8 p.m. All right, New York time. So make sure you change your TradingView time zone to New York over here. Now, once you have done that, you have to mark out the most recent high and most recent low on the 15-minute time frame. So on the 15-minute time frame, you are marking out the most recent high and the most recent low. Now, once you have done that, you are looking for a purge of either the low or the high at 8 p.m. open, all right? Or in between 8 p.m. and 10 p.m. Okay, so this is the window period, and within this window period, you would be looking for either for price to take out the recent high or recent low on the 15-minute time frame. Now, essentially what you're looking for is a sweep, and then afterwards, let's assume that the sweep happens in between this time period. You are dropping down to 1 minute or 2-minute time frame. Okay, so simply just drop down to 1 minute or 2-minute time frame, look for a market structure shift. Okay, and you are simply taking your entry from the fair value gap that forms. So primarily, I would be taking my entry from the extreme fair value gap. Okay. So what happens then is you simply take your long right here, put your stop right below the low, and you go for 1 to 2 or 1 to 3, or you target this high over here, right? You of course would be taking partials along the way if you are holding till this high. And if I flip over the chart, you can see that just like that, we have the most recent high marked out and most recent low marked out over here, right? And similarly, you can see that within the 8 p.m. and 10 p.m. window period, you get a sweep of liquidity, and then you look for a market structure shift and take your entry. Now, your entry could be after 10 p.m. It doesn't really matter, but the sweep must happen between 8 p.m. and 10 p.m. So that's the entire model, guys. Now, it doesn't work with all pairs. So I'm going to give you the pairs that it actually works with, okay? So the number one is AJPY, and then the next one is CADJPY, all right? And then GBP-JPY, and my most favorite to use it with is gold. You can also use it with silver, okay? Now, these are the pairs that you should be trading with this model. If you are a Forex trader, please use these pairs. And if you trade gold or silver, right, you trade this strategy as well, okay? You do not trade this with Euro USD or any other pair, because essentially this is when the Asian session actually starts. That's when the most of the volume comes in. So when the volume comes in, you're gonna see the actual power of 3 happen for these pairs, okay? So the manipulation is gonna occur between 8 p.m. and 10 p.m. and for the rest of the day, you're gonna have distribution. So what essentially is power of 3? You get accumulation, right? You get manipulation, and then you get distribution. right? So power of 3 could be for a daily candle, could be for a weekly candle, could be for a monthly candle. But essentially for this strategy, we're looking for a daily candle power of 3. So the original consolidation, right? Then manipulation and then distribution. The consolidation will happen after the previous day's New York session ends. So that's going to be around 12, okay? So this is going to be somewhere around, or actually 12:30, okay? So at 12:30, that's when the session is going to be over. All of the sessions are going to be over, and then you would be outside hours. This price action is going to be outside hours, and then you have to mark out the most recent low and most recent high, and you simply look for a power of 3. Now, here is an exception over here, okay? So let's assume there is no like most recent high or most recent low, if that makes sense, right? I don't know how to put this, but let's suppose that there's no most recent high and most recent low before 8 p.m. So what you can essentially do is, let me just remove this, is you look for a low or a high formation inside this window period, and then you look for a sweep. Okay, so let's assume this high was formed inside here, and this low was formed also over here. And let's assume that we have a purge of this high within this window period. Now that is also considered as a power of 3, but the high probability one is going to be the most recent high and low that are formed before 8 p.m. So now that we know the entire model, guys, now let me give you guys some examples. So that is going to clarify each and everything. Okay, guys, so here is example 1, looking at CADJPY. And if I play this through, you can see that at 9, this candle, I have marked out the most recent high and the most recent low. So if I go to the 1 minute time frame here, right, we want to see sweep of either this low or this high over here. So let's see what happens. So we get a sweep. So now we're looking for a market structure shift with a fair value gap. And you can see that we do have a tiny bit of fair value gap. No, actually, this is not a fair value gap. Let me just confirm. Okay, no, it is not. So we are looking for a displacement and market structure shift with fair value gap, okay? And we do have one here, but there's no fair value gap. So we're going to wait and stay patient. And right here, what do we have? We have a shift in the structure, and we also have this fair value gap around here. So we're going to go short right here, put our stop right above this high over here. Don't be greedy and put your stop somewhere around here, because spreads are going to take you out, especially because we're taking trades on the 1 minute time frame. So make sure you always put your stop above the swing high and swing low. So we're going to target this, or at least at minimum 1 to 2 risk to reward. So let's see how this plays out. So we get a tap, we go into a little bit of drawdown here, push back up once again, but eventually you're going to see that if I go to the 5 minute time here, you're going to see that price hits the take profit level. And of course, with the benefit of hindsight, you can see that the take profit level was hit. So let me give you guys some more examples. All right, guys, so here is example 2. So at 9:59, right, we're going to mark out the most recent high and most recent low. So this is the most recent high. And notice we are always looking after New York session. So this high doesn't matter to me. This low doesn't matter to me. I'm just looking at this price action when the sessions are over, okay? So I have the most recent high and I have the most recent low over here. Now let's drop down to 1 minute time frame, okay? And let's see if we get a sweep and a shift in the market structure. And yep, so after the sweep, we have a shift in the market structure with a fair value gap. So this is going to be our entry level. Long just right here, stop right below this low, and we can target this level right here. So let's see how this plays out. We get a tap and the take profit level was hit with insane accuracy. Okay, so we have accumulation, manipulation, and then distribution. Very simple. Let's move on to another example. All right, guys, so here is another example, looking at gold once again, and you can see this is the most recent high at 959. And here's another thing that you must keep in mind. Okay, so you can see that this low was taken out. So before the 8 p.m., right? So we want to mark the lowest one. So this low becomes our draw on liquidity, right? Because this low was already taken out. So we have the most recent high and the most recent low. I would consider this low as the most recent low, but since this low was taken out before the 8 p.m. open, right, I'm considering this liquidity level. So now what I'm going to do is I'm going to drop down to 1 minute time frame, right, and I'm looking for a purge to the upside or downside, and you can see that we got buy side liquidity sweep. Now we're looking for a market structure shift with body closure and also with a fair value gap. So let's see, and there we have our market structure shift. Now we have this fair value gap over here, and I'm going to take my short position here, stop right above the high, right, and I'm going to go for 1 to 2 at least. So let's see how this plays out. And you can see we got a tap. We came back again, but you can see that the level was clearly held, and we had beautiful accumulation, manipulation, and then distribution to the downside. Let me give you guys a couple of more examples. All right, guys, so here is another example looking at AJPY. So at 1959, you can see that I'm going to mark out the most recent high, and since this low is already taken out, I'm going to mark out the lowest one. So this is my draw, and this is also my draw, but we need to see a sweep first. So let's go to the 1 minute time frame, and let's see which one of these levels are taken out first. So the high is taken out first, so I'm looking for a shift in the market structure with fair value gap, and we clearly have it. We had a shift here, but there was no fair value gap, but then we had a break of structure with a fair value gap formation. So this is going to be my fair value gap. This is going to be my entry, stop right above the high, and we'd go for 1 to 2 or 1 to 3. So let's see how this plays out. We get a tap, and the take profit level was hit, taking out this level. So price is not always going to go towards the draw on liquidity, right? That's why it's preferred to take your profits at 1 to 2 or 1 to 3. So thank you so much for watching, guys. I really hope you guys enjoyed today's video. Yeah, just hit the subscribe button.